Hi guys, and welcome back to Nifty Challenge. So this is the last of the trend line series, and this is the very important video about the trend line series, in which I'll be sharing some excellent secrets with you, and I'll be telling you about all the three videos that I've shared previously, that how do you find and how do these patterns fail, because these things are in all of books also. In a lot of books you will find about these continuous trend line patterns, and the last pattern which is remaining is the flag pattern, which is the bullish flag and a bearish flag. So before that, we just revised once. We did three continuous trendline patterns. The first one was ascending broadening, the second was descending broadening, and the third one was equidistant channels. In the equidistant, you had a descending channel, ascending channel, and a parallel channel. Now the fourth one is a flag pattern. Now there are two kind of flag patterns. This is as per the books. That as per the books, they say one is a bullish flag pattern and the other one is a bearish flag pattern. All right, so I'll just make a flag for you. Sorry for that. This one, right, you make it a dark color with a thick line. So this is what happens in a flag pattern. You see, this happens to the, you can say it this way, and then there is a breakout on the flag. So this is a bullish flag. See, this forms, this forms, this forms, and then there is a bullish flag pattern. It gives a upside breakout, then an insider game, and then an upside breakout. I'll show you much more examples. This is just a general view, but I'll be sharing this main secrets with you of this pattern, and we'll see more and more of these. So let me first find a good flag pattern for you. This is a chart of ICICI Bank. Now this is basically called a bullish flag pattern. In this pattern, when it is formed on an upside, they say when the breakout happens with volumes, then it breaks, and the breakout is basically the breakout of this pole. This is the pole of the flag, and then it is an upside. But I believe this pattern to be on both the sides. It is also a bullish and also a bearish. The breakout can happen on either side. I will show you with examples how these things fail. Let me first find the most suitable one for you, where we can show you that this is a bullish flag pattern. See, right here you can see this is a right good upside followed by a flag, and then a bearish breakout happened. Let me show you more. This is a chart of Tata Motors. Right here you can see let me just see where I marked these things actually just now. Okay, just hang on and we will see where are the flags forming. You can see this right here, a good upside consolidation, and there was a bearish downside happened. This is the pole. The top of this green candle is the pole, and the first secret of this flag pattern is that after a pole is formed, there is a consolidation, and this consolidation is equidistant from the center of the pole, where the pole becomes a center. From here, the next day, whatever is the upside of the candle, you can mark this down. Suppose this is 328, this top is around 341, so difference of about 13 points. So if it has made a high of 13 points from the pole, then you can be sure that one day it will also make minimum 13 points on the downside from the pole as well before a breakout happens. This is a very important secret of this pattern. See, if you mark a center line on the pole right here, okay, and you see an upside happen 13 points, and you see a downside 313 from 328, 13, if you subtract it is 316. So equidistant formation is first formed before a flag pattern is completed. An upside, we mark it for you. So this is the pole, we say, this is the flag, this is the upside of the flag, and then this is the downside of the flag. So you see, from the pole it has made an equidistant upside and downside, and then a breakout had happened right after this area. Normally in this case, so how does a breakout happen is you need to monitor the volumes. So for most important is the volumes. Let me see the volumes first. Okay, so see, from here selling came. Always the top of this pole is your stop loss. In either side breakout, the top of the pole is your stop loss. So see, selling came here, this has broken the flag, but you will not do selling because the volumes are much lower. lower than the previous day. So this is a false breakout that happened, and then came an upside. It nearly came to the top of the flag. This is a slow movement, again a slow movement. Right when this good volumes come, you see a breakout happens. You put a stop loss here and you go for a buy on the top of the pole. You go for a buy and an excellent upside, and the points that you get is basically the distance of this flag is the equivalent amount of points that you will get at least once. So let's see, this is 340 and this bottom is 314. We can say about 26 points. See, right from the flag, that is 328, you will get at least 26 points. That is around 354. See the high, that is around 357. So if you got a buying here, you will make a profit of at least up to 354, and you definitely got it. This is a bearish flag pattern, a bullish flag pattern, but these patterns can also be bearish. I do not consider them to be on one-sided patterns. Let me show you more examples, and then I will show you the second secret of this pattern, which is very, very important, and how these things trap people, and what are the important things which a lot of analysts or good videos on YouTube will not show you, which I am going to show you. Let me first show you more examples about it. All right. Okay, see this right here, an example of a opposite that happened. Sorry, where did it go? Okay, see this, you can call it a bearish flag. Right here, a good downside, then a flag has formed, and then it gave a breakout, but this is a gap down or gap up opening, and you see the volumes, excellent volumes, and then it is given an upside breakout. Let me find better examples. Actually, this is not suitable. Let me just... So right here, we're on the chart of Reliance Industries, a beautiful flag formation you can just see. Let us see what we have just learned, if it works out. And this is the downside that begin. Right here, you got excellent volumes. It gave you an upside. It formed a pole. You see, this has just formed a pole. Now from here, you draw a line straight first. Now this line has given you an upside of a point. You're just consolidating. You can even assume this as the top of the flag. Instead of going on that area, you can assume as this as the top of the flag, because it's settled here. So you, from this area, the next day you got an upside, you got a downside. So you just monitor this upside of the next day, and you form a line here. Okay, and then you are sure that this distance, this is not a small distance, my friend. This is 499 and this is 493. That is 6 points, 7 points, 6 points, yeah, almost. So you are sure that before giving a breakout, you will see at least 6 points on the downside as well. So you see, it came here, it gave you much more, but this is just a secret that I'm sharing you about this pattern. It formed this area. Now this came, so this is upside downside, so that is around 13 points we got. So this is the pole right here. The day the breakout will happen from the pole, you see, you monitor the volumes, and that breakout will give you at least this distance, that is around 499 to 486, around 13 points you will get. So from here, when the breakout happened, you see you got at least more than 13 or 14 points. The breakout happened. This is called a bullish flag pattern, and right opposite to it is a bearish flag. You see this downside came, consolidation, and it gave an upside breakout. Instead of going on a bearish side, it gave you an upside breakout. So if you read the books, they call this downside flag. This is basically an opposite of the flag which I am showing you. The bearish flag pattern is right opposite of the flag which I have just shown you. You can just assume it to be like this. See, so in this pattern, basically it should consolidate and give a downside as per the books, but it has given an upside here. So that is why I say, for me, these patterns are both sided and not just one sided. You can find it, you can do a lot of homework on these things. See right here, you're forming this pattern, a bearish zone of a bullish flag pattern. You see, this is a bullish flag, but people would have told you this is a bullish flag. They will say for a buying in this area, but right here it is showing you a selling. You can see this is consolidating, and then the breakout happens right on the downside. You got excellent points. Now let me show you the biggest secret of this pattern, which probably nobody tells you. Let me show you a beautiful chart. The chart is of pharma industry called Lupin. You see, this is a perfect bullish flag pattern. perfect bullish flag pattern. I hope you agree with me on that. Right here you see there is a upside, then there is a downside. Now just imagine yourself as a person who has just learned this pattern from me. You will form this pattern. Now this is your pole, okay, 910. The distance of this pole is around 887 and 919, that is around 32 points. So whenever this breakout will happen, you will expect at least 32 points to go on the upside, right? 32 points from the pole. This is 912, so your target should be at least 944, right? See, at 939 it should be more around. It has just trapped you, and instead of giving a breakout, this flag fell. Now here I will teach you what and it has right next to it formed a bearish flag. You see this, a bullish flag, right opposite to it a bearish flag. So confusing in this area. You know how the pattern has failed. So for this I'll show you the first video that I made you about support and resistances. Now all the patterns that I've taught you till now, all of them are to be used with support and resistances. Let's come to the area chart. Let's make the same Lupin chart as a weekly chart, okay? Because I had told you that support and resistance should be at the maximum periods. I hope you remember these things. Sorry, where is our pattern gone? Just a moment. Let me just find the pattern back. Yeah, it's right here. Okay, so right here our pattern. So instead of going on a breakout, it trapped people, and we will now find out how this trap was formed. Okay, let's come to a weekly view of this chart in the same area. Let me get back. So this is July of 2018 approximately. Let's go to the weekly chart. Let's change it to area chart, and 2018 we come to the July area. Right here we are. So let's see if you are forming support and resistances, from where will you fall. Is this a good spike for you to form a pattern? Is this a good spike for you to form a pattern? These are good spikes. Let us draw lines from the spikes that we know. This is very high for us right now. Okay, this is a good place. This is a good place probably. Let us draw one here. See, on the downside, even this is a good spike right here. Let us draw one here, and it is also matching more in the future. It is also matching with this spike, if you notice. So this is a good, that's why it's a good spike. If you just extend it, you see that these both spikes are actually matching. Yeah, and let's now come to the area chart and come back to the daily chart. So this is a resistance zone which you have got from a weekly chart on this pattern, on this particular Lupin chart. Let's come to 2018. Let's see what happened. I think I don't need to say much. Can you see this thing? Why did this trap people? This is the reason it trapped people. This was a very strong resistance, and if you follow these steps, if you make your support and resistances even after making any patterns. So what I'm trying to teach you is, please, you learn the patterns. They are good for learning, but always in the market and everything, you need multi-confirmations. You need multi-confirmations on everything. You need the support and resistances lines, which I've shown you how to make just in a rough zone. As and when we will make more of these pattern videos, you will understand how more of these support and resistances work. So see, this is one perfect example which I have just shown you, and this is why this trapped people. If I would have been at your place, I would have just not gone for a flag pattern, and right when this breakout happened, see, the volume must be amazing. No doubt the volumes would be amazing. You see the volumes, amazing volumes in this area, more than previous day. Perfect trap, because right here is a weekly resistance that is coming from a very long period, and right when the stock crossed here, it went down, and all the people who took a buy using this flag, because this is a bullish flag pattern, were badly stuck. I hope you understood this. I hope you will use it to your best, and I hope you like the video. And we are almost done with this bullish and bearish black pattern. I can show you more examples, but it is good if you do your own homework in these things. But always remember, all these things are equally important. So all of the videos that I'm making, all of the things that I'm showing you, each of them have a separate importance, but they all have to be checked together and used together as well. Thank you guys. Thank you so much. It's probably a short one video, so that we'll start with the next topic from the next.